The dot plot is basically they survey all the Fed members and where they think in their minds, not as a collective, but as an individual, where rates are going to be in the future, come 2024, even 2025. I'm not exactly sure how long they go out, but it gives you a sense, it gives investors a sense of where they think rates are going to be, not just a month from now or even 2 months from now, based on the Fed comments, but based on what the Fed members' economic prognostication, what they think is going to be in 24 and 25. So when we get this dot plot later today, that could be something that, again, that you take out, you do a reel on, you do a little green screen. If we have some resources that'll show you the dot plot, then we'll get that out to you. But it's basically just an estimation of what the Fed funds rate is going to be in the future, because we're always forward looking. We want to be forward looking. Unfortunately, the Fed in a lot of cases looks backwards, but this is one thing that looks forward. And one last point on all of this is, you all know this already, but right now it seems to be an inflection point that I've seen in the market, and you guys tell me, although you're not quite as tied in with the rates, but 7% seems to be kind of this inflection point. When we cross over 7%, we see contracts start to fall. We see borrowers if it's got a 7 handle on the rate, except for first-time home buyers, they might get a little bit more cold feet, but we could talk them through that. But 7% seems to be this inflection point. And right now we're in the low sevens, low to mid sevens, 7.25, 7.3. Mortgage News Daily, actually, the link will give you a good indication every single day of where rates are at. So it's a good indication. It's not biased in any way from what I've seen. But when we do get back below that 7, you're going to see seller concessions go away. You're going to see more competition. You're going to see more people coming into the market. If we get down into the mid 6s or low 6s, or even the high 5s by next year, then this whole thing's going to, I don't want to say the whole thing's going to turn around. We're not going to do a 180 and go back to the way it was a couple of years ago, but it will shift, and buyers will be at a disadvantage when putting in offers, especially first-time home buyers. To Ashley's point, right now you don't have as much competition. You can ask for seller concessions. You can do buy downs in 3 or 4 months, 6 months, 8 months. That's going to flip, and they're not going to have those types of that type of advantage in the market. So that's what I would tell all your buyers, but especially your first-time home buyers, is now is the time to buy when rates are above 7, because this is when you're going to have the biggest advantage in the market. And don't wait for rates to come down, because then you'll just end up getting priced out, or you won't get the home that you want.